Hey guys, what's up? This is Tony Shea from alphapursuits.com. So the market continued to move along the daily uptrend line as well as the hourly uptrend line. So this one is drawn using the daily chart and this one is drawn using the hourly chart. And on Friday, it actually took a pause after filling this gap right here. Considering next week there is the FOMC meeting, let's take a look at various VIX indices data as well as technical analysis of S&P 500 to see what are likely to happen next week. Stay tuned. This information is for informational purposes only. Please do your own due diligence before placing any trades. So as always, let's start with VIX indices. So here is a table with VIX and various VIX indices. And then here's the calculation, the VIX against VIX indices ratio. So just like fundamental analysis, there's the P ratio, price to earning ratio. This is VIX to VVIX ratio, VIX 90 to VIX ratio, VIX to VIX 3M, VIX to VIX 6M. And on top of that, then there's the percentile rank calculation. So essentially we are comparing that particular day value against prior 1 year worth of data and see how high or how low when comparing to that prior 1 year data that particular day is. So as you can see, VIX to VVIX ratio is pretty high. VIX to VIX 90 shoot up a little bit and then quite a bit actually, and then drop down on Friday. And then VIX 3M, VIX 6M, so they sort of stay around 50, 60 level. And in case you're not familiar, VVIX is looking at volatility of volatility. So it's basically the volatility of VIX. VIX 90 is looking at 9 days for projected volatility. VIX 3M is 3 months, VIX 6M is 6 months, and then VIX is the 30 days forward looking volatility projection. So when looking at this, when the value is around 50 and looking at historical data, it is fair game to jump up to 70, 80, even 90%. It's not atypical. It is actually, it could happen. But if the value here, if they were say 10% or 20%, then it is a lot rarer for them to actually jump up that high. So in other words, the fact that they stay at this level around 50, which means the market is still very much hedged. Let's continue to look at some of this VIX and VIX indices data as well. So this is looking at the number itself rather than the ratio. And it gives a little different, different nuance, so to speak, because if you look at VVIX, it's actually pretty low. It's in fact 2% right here. But when you look at all the other ones, they are still at 50%. So let's talk about SPX technical analysis next. So as we can see right here, the market continued to move up this daily uptrend line this week. And it actually dived below that last week and came back up, forming this gap right down here and continue climbing up. So moving forward, I will be looking closely at this gap, which is at around 3,800 level. And looking at the hourly uptrend line, so this line was drawn in the hourly chart. Interesting enough, it went all the way up there and it filled most of the gap, which I have been monitoring for the last several weeks, trying to see when this gap will be filled, and it actually got filled mostly on Friday. And interesting enough, after it filled, it dropped back down. So let's take a look at the hourly chart here to see what happened there. So like I said, this is the gap that was formed when it came back above the daily uptrend line, and then here's the yellow hourly uptrend line. And then on Friday, it filled most of the gap and then came back down and went through that uptrend line. And interesting enough, again, there's just so many interesting things happening here. So the purple line is the 25 moving average. So this is an hourly chart, so it is using 25 hours, I believe. If it's on daily chart, then it is 25 daily. So 25 points, previous points to draw this line. And then here's the 50, and then here's the 200 moving average. That's 50 right there. So I know a lot of people, wondering, okay, so you start dropping, where is gonna go? Interesting enough, it went back up to this 25 moving average. It never crossed this uptrend line, so you'll be interesting on Monday to see if it's gonna go up and then continue climbing up, which I highly doubt it, considering there's the FOMC meeting happening on midweek next week. So my personal bias is it will probably continue to go down, and might be some resistance here, but eventually it may go all the way down to this gap here. It may never go down there, and depending on what the FOMC announcement is, it might even shoot up and go completely different direction. So based on what we saw earlier with the VIX indices numbers, again, my personal bias is the market will go down, but again, it is fair game because historical data, based on the historical data, when it's at 50, it could drop down to 20 or 10. That is possible, and it could also go the other way around. It's just if it was 20, for it to go all the way up to 80, it's very unlikely. So since it's stuck at this 50% level, market could easily go either way. And again, looking at this daily chart, so moving forward, obviously this 25 days, 50 days, and 200 days moving average. So this will become, this is the downtrend line, the 200 days all the way up here. So the downtrend line will act as a resistance if on Monday it tried to go up there. 50-day will act as a support, as you can see right here. It penetrated a little bit on Friday and then it came back up, sort of stay at that level. So it'll be interesting to see on Monday what will happen there. If it does go below it, then this 25 moving average will likely be the next resistance. And then once it go all the way down here to this uptrend line, again, that will act as another resistance. And then all the way down here, if it feels the gap right this level, you might stop right there and turn around, who knows? If not, then this price level might act as resistance. So all these lines could act as resistance. And like I said before, and I'm going to repeat this again, technical analysis is not the tool to predict what is going to happen in the future. It is a tool to allow us to see at which point certain action can be taken. So what I mean by that is, let's say it goes all the way down here and it doesn't penetrate the 50 moving average. What shall we do? At that point, I will need to position myself to prepare for if the market moves across this midterm downtrend line. If it does penetrate, then it's totally bullish. I will need to, readjust my portfolio, my positions to anticipate, to sort of follow up on that. Now, if it goes to the other way, right now my position is negative beta when beta weighted against SPX, which means if it goes down, I will make more compared to it goes up. So, I might just continue to watch and see how far it will go down, and I might close down depending on how it moves. When it moves down to a certain level, how the market reacts to it. And if it doesn't go the way that I think it should or I want it to, then I will close down some of those positions that I'm shorting. So that's really the purpose of technical analysis. And again, it's not a tool to predict the future. It's a tool to allow us to see if something happens at a certain point. If it doesn't happen the way we think it should, then we need to take some action. So that's it for this time. If you enjoy this video, please give it a thumb up and please subscribe to the channel. And of course, if you have any question, please feel free to leave a comment in the comment section, and I'll see you in the next video.